Hello, welcome to Real Estate News, April 2021. This is Ruby Singh, Realtor Ruby Singh. So many of you always ask me, you know, you want to buy a house, but you don't know where to start. You don't know what is your credit score. You don't know, how you know that if you're ready to buy a house or if this is the right path for you, how much money you have to put down to buy a house, what should you do? So here are actually today we'll be talking in this news is that things you should consider when you're buying a house. Okay, you buying a house, are you ready to buy a house at this time? You know, and if you can afford the payments, correct? So buying a house is, housing market is at this time in April 2021 is housing market is recovering, has been nothing short of remarkable. Many experts they agree that turnaround from nation's economic pause from last year is playing out like it's extremely well for real estate. So it's the ideal time to buy a house, of course, right? For those who are ready to make that purchase and they know they can afford the payments and they are ready to either move up or they are ready to sell this house or they are ready to move up. So here is dive into some of the biggest wins of home buyer this spring. Okay, the mortgage rates are still low, right? As we know that in 2021 the rates hit all-time low last year in you know 16 times actually. It fall below 3% for first time ever. It's continuing, low rates in the early part of this year are setting buyer up for significant long-term gains, according to Freddie Mac. Okay, so they are more optimistic, continue as the economy slowly regains its footing. It's affecting the mortgage rates, and though the rates continue to rise, they remain nearly historically low. So essentially, it's less expensive to borrow money for home loan today while rates are low. This is a huge opportunity for buyers to capitalize on right now, to purchase. So buying a more affordable uh, the homes are more affordable to buy at this time. So this trend of low mortgage rate has made the typical monthly payment, including we have to consider, that it's not only just the payment, it has a principal, it has an interest, right? And then you have to pay tax and the insurance if you want to include the taxes and insurance into your monthly payment, or if you want to pay them separate. But for in monthly payment, um, the what you call the principal and interest, that's always included in the payment. Okay, so it's this is actually a huge opportunity for buyer to buy a house because they can take advantage of the low interest rate. So it's more affordable than renting. Okay, this trend of low mortgage rate has made it's a typical monthly payment including principal and interest, and is less expensive for buyers, right? Because of the rates are low, and of course naturally the payment will be lower too, correct? So according to our data, Kushi is a deputy chief um, economist at the First American Tire. He said that the low mortgage rates and income growth spurred an 18.9% increase in housing house buyer buying power compared with a year ago. Buying a home now versus renting one may be a game changer. Okay, it's amplify long term saving for home buyers. When paying a mortgage as opposed to paying rent, that money is reinvested back into, in your favor. So you're contributing to your own net worth when you own a house. So this term called equity, of course, and it's one of the biggest financial benefits of home ownership, right? Because you have an equity saving into your house. So equity is growing. The homeowner equity report from the CoreLogica notes that the average home owner gained 17,000 equity in just the last year. With equity growing so significantly, you can feel confident that homeownership is sound investment, you know, for the home buyer. So homeowner equity gains over last year, like for example in California is 34K, in and same as in different states. But here we are in California, so we'll be talking about California. But home prices are appreciating. Okay, according to many leading experts, home prices are forecast to continue appreciating this year. Okay, when home values appreciate, it's another factor that will increase your equity. According to Lawrence Yan, the chief economist at National Association of Realtors, NAR, the housing market was spectacular surprise in 2020. Because of COVID, everybody was scared that what's gonna happen, it's gonna go down, but instead of that it spurts, right? And the positive trend will it continue uh, even in 2021. We know that, right? We know how this market in 2021 is how it's keep rising. It's actually 10%, you know keep rising every month, right? So home prices will also climb, and but I expect that more moderate increase than we seen, a break for a first time home buyer. Okay, mortgage rates will continue to be favorable, staying at near historic low, right? Around 3%. I think even up 3.6 on average, but still it's so low, right? Last year it was a little bit higher, over 4%, but this year again it fall down. So the labor market will strengthen, especially as vaccine became widely available and life moving toward normal. So knowing home value are increasing while mortgage rates are so low should help you feel confident that buying a home this year is advan- advantage for you from the perspective and a strong long-term investment. So the bottom line, if you considering buying a house, this may be a moment, especially with today's low mortgage rates. Let's connect to assess of your changing needs and set up for success in the home buying process. So, if you're ready to afford a house, what community, what area um, you want to buy a house. So, expert insight for this spring home buyer, are saying that it's a several industry leaders have to say that about home buyer may be empowered in housing market this spring into next year. Algo Wolf is a chief economist in Zonda. He's also saying that some people will feel comfortable listing their house during the first half of 2021. Other will want to wait until the vaccines are widely distributed, so because they don't want to move yet, um, because COVID is also is a big impact in housing market. So this suggests that more inventory will be for sale in late 2021, when everybody is, going through the COVID, and spring selling season is in 2022. So according to actually Freddie Mac, um, the average 30-year rate mortgage hit record low over a dozen times in 2020, and low interest rate environment is, projected to continue through this year. We expect interest rates to average below 3% throughout the end of 2021. It seems like that so far, rates are stabilizing, and it's still at the lowest, uh, you know, throughout the decade. So according to actually economic, data analysis it says that nationally the medium listing price for home in is around 340, with the medium one bedroom rent of 1533. It would take at least like 11 months to save the 5% down payment, which is, if we calculate, for 340,000 uh, is the home purchase price, and if we do the 5% down payment, it would come up to around 17,000. Okay, so no matter their location, young people who are able to remain gainfully employed and cut back on housing cost because they move back with their family to ride out the, pandemic, will be able to amass significantly saving and likely become a homeowner soon than otherwise expected. So the bottom line is that experts are widely optimistic about the housing market right now. Okay, if you press pause on your real estate plans, then last year, let's chat to determine how you can rearrange to the home buying process this spring. Uh, you can always, contact me, or you can contact your local real estate agent. So staying patient in the competitive market is the key, right? So according to Realtor Confidence Index survey from National Association of Realtor, now buyer demand across the country is incredibly strong. That's not the case. However, on the supply side, seller traffic is simply not keeping up, okay, making it challenging in many areas for buyers to find a home to purchase. As we know that so many buyers are so frustrated at this time because of the competition, that and then also it's hard for realtors too, right? Because they keep writing offers after offers, and people are bidding over 100,000 or 200,000 than the asking price. So it's a market buyer, market is very, very high at this time. They are, you know, buying, and they want to take advantage of a market, but that's the reason that, but not too many sellers, who are selling the house. That's the reason is the shortage of the market, because not every seller is ready due to pandemic, and if they put the house on the market, they have to also find a house to go to move up to, right? So according to actually NAR report, which is the National Association of Realtors report, the actual number of homes for sale stand 1.4 million unit, down 25.7 from a year ago, which is 1.40 million. Okay, inventory is at all-time low, right? Because that's the reason it's so much competition, not enough homes on the market, and why it's only like 1.9 months supply available at current sale price pace. So in a normal market, okay, in a normal market, that number would be 6.0 month of inventory, significantly higher than it is today. What does that mean, you know, for a new buyer? So if you're ready to buy a house, you're having trouble finding a house, you remain patient in the search of this process. At the time, be ready to act immediately once you find the right house. Since the bidding war, it's a war, right? It's a bidding war are more common. Like people are like bidding on so many of my I get the when I write the offers, it's like people are bidding over 100,000. They are over asking price for few homes. That's the competition is so high, and there's not even enough inventory. Okay, so the bottom line is to either you have either you can connect to your expert, yeah, or guide to help you balance both patience and persistence in the home buying process. Okay. um there's also three reasons we are not, people think, okay, Ruby, are we in a, it's like real estate bubble, is that gonna hit? Okay, there's a three reasons I'm gonna say, okay, that we are not in housing bubble. Because home values appreciate by almost 10% in 2020, okay, and they are forecast to continue rising this year. This has some voicing concern that we may be in another housing bubble like the one we experienced little over a decade ago. Okay. Here are three reasons that, why that's actually not the case. The market is completely different today. Number one, okay. Number one is this time housing supply is extremely limited. The price of any item is determined by supply and demand. We know that. If supply is high and the demand is low, prices normally decrease. If supply is low and demand is high, prices naturally increase. So in real estate, this balance is measured at monthly supply of inventory. Because the inventory is low, that's the reason demand is high. Okay, which is based on the number of current homes for sale compared to the number of homes, buyers in the market at this time. Number of buyers in the market and number of current homes, for sale in the market is not balance. It's not at balance. Okay, it's totally out of balance at this time. So the normal months supply of inventory for the market is about 6 months. Anything above the defined buyer market indicate prices will soften. Anything below that define a seller's market in which prices normally appreciate. Okay, so like, let me say that again. Anything above that define a buyer's market indicate prices will soften. Anything below that defines a seller market, which is prices are normally appreciate. In between like we know that in 2006 and between 2008, the monthly supply of inventory increased from just over 5 months to 11 months. The monthly supply was over 7 months in 27 of those 36 months. Yet home values continue to rise. Monthly inventory has been under 5 months for the last 3 years, under 4 for 13 of the last 4 months, 14 months, and under 3 for the last 6 months. It currently stands at 1.9 months. Historic low. Remember, remember we talked about that earlier. If supply is low, then demand is high. Prices are naturally increasing, right? Because of the shortage. So this time, number two, this time housing demand is real. During the housing boom in the mid 2000s, there was Robert Schuller, a fellow of the Yale School Management International Center of Finance, called irrational exuberance, which is the definition of the term is unfounded market optimism that lacks of real foundation of fundamental valuation, but instead rest on psychological factor without considering historic market trends. People got caught up in the frenzy and bought houses based on unrealistic belief that housing value would continue to, you know, escalate. That's the reason the mortgage industry fed into the craziness by making mortgage money available to just about anyone, as shown in the mortgage credit availability index, which is called MCAI. Um, it's published by Mortgage Bankers Association. The higher the index, the easier it is to get a mortgage. The lower the index, it's a more difficult it is to obtain one. Prior to the housing boom, okay, the index stood just below 400, and in 2006 the index hit at all times high of over 868, meaning just above anyone could qualify for mortgage. Today is the index stand at 125 4.6, which is well below even the pre-boom level. Okay, in the current real estate market demand, it's real. Oh, it's real. It is real. It's you can see how the frustration of the buyers, who want to buy a house, and they can afford, they can take advantage of the mortgage rates, but it's a bidding war. Okay, so it's not fabricated. Millennials, the largest generation in the country, have came of age to marry and have children, which are two major drivers for home ownership. The health crisis is also challenging every household to redefine the meaning of home and reevaluate whether their current home meets the new definition. The desire to own, you know, the American dream, coupled with historical low mortgage rates. It makes purchasing a home today very strong, and it's a sound financial decision. So therefore, today's demand is very real. Remember, if supply is low, right? That's all we've been talking. The supply is low, the demand is high, the prices, of course, that's the reason, is naturally increasing. And so we come to our point number three. Okay, the point number three is this time household have plenty of equity. Okay, again, during the housing boom, it wasn't just a purchase who got purchasers who got caught up in the frenzy existing home ownership, starting, they started using their home like ATM machine, right? They were just pulling out their equity, right? And because the house values were going so high, there was a wave of cash out refinance, which enabled homeowners to leverage the equity in their home from 2005 through 2007. The American pulled around, estimate around $824 billion in equity from their home, okay, throughout the nation, we're talking. And that left many homeowners with little or no equity in their homes at critical time. As price began to drop, some homeowners found themselves in a negative equity, situation where the mortgage was higher than the value of their house. Many defaulted on their payment, which led to a, um, you know, avalanche of foreclosures. Okay, because now, they couldn't afford the mortgage payments, and of course, the lenders and the bankers, they also play a huge role. They did not educate the consumer, and consumer didn't know better. It was that, those low income wages, that you don't have to show pay stubs or anything like that. um, it's you know, people were just getting money left and right from their houses. But again, the lenders and bankers, they were not educating them that what's going to happen once, this low interest rate is no longer is going to be available, and their payment going to adjust to the higher rate. And then that's it. People couldn't afford the payments in that case. So today, the bank and the American people have shown that they learned the valuable lesson, okay, from the housing crisis a little over a decade ago. Cash out refinance volume over the last 3 years was less than the third of what it was compared to 3 years leading up to the crash. Okay, the approach has created level of equity it never seen before. According to, the Census Bureau, over 38% of owner occupied housing units are owned free and clear without any mortgage. Atom Data Solution just released that fourth quarter 2020 US Home Equity Report, which revealed that 17.8 million residential properties in the United States were considered equity rich, meaning that the combined estimate amount of loan secured by those properties was 50% or less of their estimate market value. The count of equity rich properties in the fourth quarter of 2020 represent 30.2%, or about 1 in 3 of the 59 million mortgage homes in United States. So if we combine the 38% of homes that are owned free and clear with the 18.7 percent of all homes were have at least 50% equity. Okay, around 30.2% of the remaining 62% with mortgage. We realize that 56.7% of all homes in the country have a minimum of 50% equity. Okay, that's a significantly better than the equity situation in 2008, where you know houses were under the water. That's what they used to call them, underwater, right? Because the payments were, a lot higher, and the values were not enough, uh, you know, but their mortgage were a lot higher than the housing values. So the bottom line is that the time housing supply is a historic low, demand is real, rightly motivated. Okay, even if prices were to drop, homeowners have enough equity to be able to weather a dip in home value. This is nothing like 2008. In fact, if it's exactly opposite. Okay, that's the reason why the cost of the home is more critical than the price of the house. Okay, the it's the housing market inventory in is at all-time low. There are 25% seven fewer homes for sale today than there were time last year, and buyer demand is very strong. The pending home sales index, which is it's called PHSI by the National Association of Realtor, now report that year over year contract signings rose around 13.0%. Okay. As we establish whether there's a shortage in supply of an item that's high demand, the price of the item is increasing. That's exactly what's happening in the real estate market right now. Okay. The home prices index is, according to CoreLogical report, it's increasing 10% over than past year, right? The 3.3% homeowner increase on year basis at the end of, it will increase by the end of 2021. That's on a low end of most expert forecast, right? So they may rise even higher. So this is a great news if you're planning to sell the house. On the other hand, as a first time home buyer, uh, repeat buyer, this may instead seem like troubling news, you know. However, purchasers should realize that the price of a house is not as important as the cost. Okay. So hope this help, and but so let's actually, let me talk about the breakdown also. So let's talk about the breakdown, okay? There are several factors that influence the cost of the house. What comes in the cost of the house. Like we know that purchase price, it should realize that the price of the house is not as important as the cost of the house. Okay, so let's break down. Okay, um, because I want you guys to understand thoroughly what comes with it. Okay, if you want to buy a house this year, so there are actually several factors that influence the cost of the home. Okay, the two major ones are the price of the house and the interest rate at which, if you can borrow the funds, you know for the loan necessary to purchase a house. So according to Freddie Mac, the average interest rate for uh, 30-year mortgage rate in January 2021 was 3.62. Okay, and the rate of January 2021 was 2.73 in 2021. So that's a big difference from last year in 2020, in January 2020, 3.62, and here in 2021 in January it was 2.73. Big difference. Let's use the example to see how that difficult impact the true cost of the house. Assume you purchase a home in January 2020, okay, and you took out like $350,000 mortgage, correct? And to buy that house in January 2021, applying years yearly years appreciation. Remember we talked that it grow 10%, right? We talked earlier about that. So if it increased 10%, then the needed to take out mortgage for this year, it will be 385,000 than 350,000 last year. Okay, it's a big difference. So how would you actually we determine the monthly payment that change based on the year's lower mortgage rate? Okay, this table calculate that difference you would see in your monthly payment at lower mortgage rate while applying home price appreciation as well. Different in monthly payment, like time of the purchase, suppose it was in 2020. The mortgage amount, we can say that loan you borrow a mortgage amount 350,000. And we say that the interest rate was 3.62% at that time. Okay. And the monthly payment with principal and interest, only principal and interest we are talking. Okay, you know that the factor is principal, interest, tax, and insurance, and which is called PITI. Principal, P, right? Interest, I, T is taxes, and I is insurance, and that's what we call PITI. So in 2020, 350,000 mortgage amount. Rate is it was 3.62 at that time. The PI, which is only principal and interest, would be for that is 15.95 right? So $1,595.19. And if we consider that this year in 2021, because the home prices are keep rising, suppose the mortgage payment is 385, okay, for the price of the house, and the interest rate is, of course, it's lower this year, we know that, is 2.73. So the mortgage payment for this year for 385,000 mortgage will be $1,567.65. So the difference between last year payment and this year payment would be $27. Okay. But why it's only, even though the mortgage amount is so high, it is the interest rate that played, a big factor in this situation, because using a 10% increase in a home value for the past year, right? That's the reason from 2021 to, 2020 to 2021. So that's a saving of almost $28 per month, which equates the 336 annually, or $10,000 and 80, uh, 10,080 over life of 30-year of the home loan. Okay, 30-year mortgage. So the bottom line, my friend, if you're ready, even as a home value continue to appreciate, it's great time to buy a house while mortgage rates are still low. And owning a home is still more affordable than renting, correct? Especially for the families. If spending more time of home over the past year is making you think hard about buying instead of renting, you are not alone, right? Because renting is not cheap. You may, however, be wondering if the dollars and cents add up in your favor as home price continue to rise. According to the expert, in many cases, it's still more affordable to buy a house than to rent one. Okay, that is according to data solution. The renting affordability report, owning a medium price 3-bedroom home is more affordable than renting a 3-bedroom property. you know, and uh, it's differences like almost 572 or 63% of the 915 US counties analyzed for the report. So that has happened even though median home prices have increased more than average. Rent over the past year in 83% of those counties have risen. Okay, also more than the wages in almost two-thirds of the nation. How is it possible? The answer: historical low mortgage interest rate. Todd Teta, he's a chief product officer with at home, data solution. He explained that home prices are rising faster than the rent wages in the majority of the country, yet home ownership is still more affordable, as amazing low interest rates that has dropped below 3% are helping to keep the cost of rising home prices in check. Okay, so these low rates are a big factor in driving uh, the affordability. He also explained that, but it shows how both the cost of renting has been relatively high compared to the cost of ownership, and how declining interest rates are having a notable impact on the housing market and home ownership. The coming year is totally uncertain amid so many questions connected to the COVID coronavirus pandemic and the broader economy. But right now, owning a home still appear to be a financially sound choice for those who can afford it. And that's the bottom line. If you consider buying a house this year, we can connect. You can contact me or your local real estate in discussing the opportunity. You can always, send me, in the comment section that what match your budget, or while affordability, what affordability is in your favor. Okay, and the key term mostly you have to consider in the home buying process is the several common terms in the home buying process, which is, of course, you have to see, the appraisal, right? You have to pay for that, which is what is appraisal. Appraisal is a professional analysis used in to estimate the value of the house. It's it's a necessary step to validating a home's worth, if it's home worth to you and your lender, as to secure financing. That's appraisal of the house. Okay. And then you have to consider the mortgage rate, right? The interest rate you pay to borrow the money. You have to pay, right? The money you're gonna borrow, the interest rate you have to pay when you're buying a house. Lower the rate, the better it is. We know that. Then you have to consider closing cost. The closing cost is the fees required to complete the real estate transaction paid at closing. They include points, taxes, title insurance, finance cost, and term that must be prepaid or escrowed. So ask your lender for, like, they can give you the complete list of closing costs, that how much is gonna, cost you per item, how much the points gonna cost you for the borrowing money, how much you have to pay for the closing cost, how much taxes you have to pay, how much title insurance you have to pay, how much financing cost you have to pay, and all the other prepaid, escrow items. They will be able to give you the list of that um, before, that they can give you the estimate. And then, of course, once you are in the process, then it will be the real list that you will be signing at the title company. And of course, then pre-approval. pre-approval is a letter from your lender indicating that you qualify for mortgage of a specific amount. Okay, they check your credit score, your income, your wages, and all the other bills, how much you have or any debt you have. They have to consider that, and based on that they will give you the pre-approval letter. So that's the reason before you even hunting a house, okay, it's very important just to go get the pre-approval from them. Okay.